Yeah, I mean that move down on gold earlier this morning. It was around 4 o'clock London time, so I wasn't awake for it, and I didn't wake up at 5:30 this morning. I didn't set an alarm. I just stayed asleep till about 7:30, which was quite nice.
Well, it's difficult to get off because it was so quick. It literally wicked down and almost wicked up within 10 seconds.
Yeah, yeah, I saw that and I thought, okay, that's cool, but that's not what we're after. We're after a bit more of a consistency and a bit more of a flow, really. And yeah, I think later, give it a chance. Later, it will do it. I'm looking for 1800 still, so yeah, we're still waiting and watching patiently. That's what it's looking like. It's still. I've got a lot of red. I'm seeing a lot of red still. It's still pressure. Pressure is still to the downside.
Yeah.
With Thanksgiving as well, nobody's been adventurous enough or bold enough, I should say, to try and take the price back up, which is fair enough. I think you'd be silly to do that at the moment.
Hello, hello.
There's about 15 people talking.
Yeah, that's Big T's iPhone.
Big T, fix your iPhone.
Let's get. So this is interesting as well. Let's get that on there and let's open that up like that. There we go. That's better, isn't it? So put that like that. Right, yeah, let's have a look. So we're at 06 now. Look, it's starting to curl over. What's the time? We're having a little bit of a push down, 11 o'clock.
Yeah, it's only just been going on the last minute or two.
Yeah, 6 a.m. London time. Don't expect there to be massive volume, but if there is, great. But yeah, certainly everything is still bearish. I'm still looking for a push down, even to get break below $1,800 on gold to test the lows, take out anyone who's putting their stops below 1,800, especially with that spike down at it was actually 5 o'clock this morning, wasn't it? There we go. About 5 o'clock this morning we had a little spike down. How clear is this? Let's see if we can just pull that across to there. Yeah, there. Let's put it there. A bit like that, I guess. Let's get this chart up as well. Let's drill down to a 4-hour. Okay, that's interesting. Well, what price action is that then? He's sharing something there. Oh, pound Swiss. Okay, so pound Swiss has had a little spike up. Interesting. Anyone looking at anything in particular, or has anyone been doing any sort of back testing, or I don't know, anything to share, anything of value, anything exciting? Hello. Yeah.
I was trading the pound Jappy, going down. This was yesterday when it made the it went down for quite a bit, but I came out after about 50 pips.
Only 50 pips.
Yeah.
It's alright. 50 pips is.
Yeah. That's an achievement. But that's about it, really.
50 pips is good, though, isn't it? That's
excellent.
Yeah. So let's have a look at yen. Pound yen's been very decent to trade. Everyone's been trading pound yen lately. It's been a nice pair just to get on. Price action's been good. So yeah, you can see it's tested the 764, went up, had another test, tested 139.80, likes the 80 number, failed at the 80, went back down to 139, and then it's actually broken down and sitting at around 138.80. Yeah, decent 100 pip move back down. Nothing, nothing like amazing about it, but just a little move down, bit of a trickle. If you could make,
I remembered what you said quite a while ago about it kind of wanting and stopping at around the 80 and the 30,
yeah,
and it was when it was it the 139 82 83 that it got to
oh okay,
before it started to come back down.
yeah,
um yeah, so I around about the time when it was happening, because it was a kind of a trend line on the chart, and I remembered that you mentioned that a while back, and I was thinking, oh, here we go.
yeah. Here we
And
go.
I entered around, and I entered not long after that.
It's all right. That's It's good, you know. That's good. It's good using historical data. It's just historical. It's these are instruments. These instruments are creatures of habit. They tend to retest certain levels. Tend to just move in a similar fashion. You get to know them. They all have their own personality. You hear people say that all the time, and that's really important.
Hello,
Hello,
hello.
hello. How are you?
Yeah, yeah. This is Sam from Nigeria.
Okay, cool.
Actually, GJ taught me a lesson, a very good lesson. Precisely that was 2 days ago
Yeah.
at GMT plus one. That's my time frame. So
What?
it was on 25th November,
Okay.
20 o'clock, 8 p.m. So it was this move at 139,613. 2 days ago, 139,613.
Yeah.
So I had this bearish order block. It was not my time for me, but I saw the bearish order block. I decided to enter the trade. Do you know I had to bear the pain of watching this going back, almost holding my hitting my stop loss for over. I couldn't. I was sleeping and waking up, and now the price has gone down, and you won't believe that I left the trade early, and now it's still going down after all the pains that I got.
Oh
Come
God.
on,
Yeah.
it's
Mm,
it's so annoying.
yeah.
Welcome to trading, buddy.
Yeah.
That was my experience.
Yeah. That's
Hell
it.
yeah.
That's that's what happens, and then especially when you're not in a good frame of mind, that will, every decision you make after that will just be emotional, and so yeah, you might end up closing it early because you've just had to sit and feel the pain and things like that. It messes you up. Yeah. Yeah. Happens. It happens all the time.
Yeah.
And my analysis was correct, but I entered. I didn't obey my rule, my time of entry. It was almost close of New York section. So I'm supposed to, but I noticed that market normally move during Asian section. That was why I entered. I was like, maybe before I wake up the next day, that they might have moved price downwards. So I decided to enter. And when I entered, they started pushing it up. Oh God,
Yeah.
it
It
wasn't funny.
it happens. It happens all the time. It's funny. I will sit there and I'll be thinking, okay, the market's about to make a move, so let's get involved, and then it goes exactly the other way at that exact time. I was like, okay, well, I got half of my analysis right. My assumption was that it was going to make a move. It just ends up moving up instead of down, or the opposite.
So it's not just me that happens to.
Happens all the time. Just as you take the trade as well. It's like, yep,
Yeah.
I timed that really well, but then yeah.
This happened. This happened to me today. Back testing.
Oh really?
Yeah.
Are you, yeah, yeah. I think Luca's back testing again. Yeah. He's back testing. Okay.
Yeah. Yes, sir.
Yes.
Uh,
I had a question. I, you mentioned that you're gonna go through some FTMO strategies.
No, FTMO generally, but not FTMO strategies as such. But we can look at some of that stuff. We can look at the risk management tool that will help, where you can risk 0.5% on a trade and just do that consistently and pass it, make 10%. Let me have a look. Let me see what I can find here. I'll pull it up. Let's say welcome to. There's been a couple of people that have been in the group quite consistently over the last
Yeah.
few months. Yeah. Hello, Alan. You all right? And Betty. Hello, Betty. Francesca. Hello. Peter. You knew Peter? Peter Christensen.
Yes. Yeah.
Hi, Alex.
Hello, Alan. Yeah, you're right. Good. Let's have a look at this FTMO. People love this FTMO. It's been a big deal. I think they've seen a massive increase in interest. They all have, all these prop firms, particularly this year where people have been furloughed. They've been having to stay at home and work from home. So this has been, it's become relevant, hasn't it? So let's have a little
Hey,
look.
what about Chris?
Hello, Alex. I think people have discovered that they don't like their job.
I
They want something.
think you're right there, mate. Yeah, I think it's a good discovery. I think they've always known that secretly. Let's have a look. Let's see. Find this tool. Pull that over here. Risk.
Do you know City Traders?
Who?
City Traders.
What's that? Is that a company?
Yeah, prop firm.
Oh, that's another new company. No, I've never heard of. This is another one. So what are they like? Okay.
There's
They found you to 2 million account.
Okay. And how many hoops do you need to jump through?
I think every 10% they double your account up to 2 million.
Oh, really? That sounds good. Let's get on that.
Yeah,
Yeah.
but that's
Start.
50-50 that split the fifth on that. I
Yeah.
believe.
I know, it must be terrible. Imagine you've got 2 million and you've got to split your profits 50-50. It means you're only going to make 1 billion instead of 2 billion. I know, it's terrible. I know, it's terrible, isn't it?
Yeah, nice.
I know, it's terrible. I know, it's...
Yeah, but
There's
they
a
give
but.
a lot of money.
Yeah, that's right. They give you a lot of money. Right, here's this tool. Let's pull this up.
Of course, there is some requirements like you can risk up to 2 positions. You can't risk more. And there is a maximum loss that you can risk.
So how much do you need to risk? How much can you risk?
Maximum 1.5.
1.5
Per trade.
per trade.
Yeah, per trade. Yeah.
That's all right. You just risk 0.5%. You don't need to risk 1.5. 0.5%.
Luca, can you put a link in the chat if you've got one?
Yeah.
What do you say?
Can you put a link? Provide a link.
Yeah.
Let's change this to 100k. Let's work off the premise that
See traders very.
that everyone's going to be taking some form of FTMO challenge, and they're going to have a 100k that they're going to be trying to trade. And let's assume 20 trading days in a month, and so the risk
300K
allocation.
as well. You can have 3 accounts of
Yeah.
100k. Yeah.
Okay. Let's do risk per trade is going to be
But I think that on big traders you can trade
5.
indices and commodities.
Yeah.
Only for experts. Yeah.
Okay. So there are limitations, but that's okay. I think you could spend the next year or so trying out all these different companies, getting once you're consistent, you're getting good at trading. Have a few different prop firms. There are a couple of guys in the group, in our groups that are using 2 or 3 of these, and so they've got an account with a couple of them, and they're doing okay generally. It's going well. There's one guy called David. He's doing quite well. Oh, here we go. That's good. let's have a look at this. This is a good Excel spreadsheet, and you can get this. I do have a link actually where I've shared it. Let's get this, copy this, and post that in the chat
Is this
as well.
your spreadsheet, Alex?
Yeah, you know, there's this one is it is. It's
Yeah, I've seen this before.
yeah, it's out there now, isn't it? It's out there, and people that are using a spreadsheet like this for their challenge to help them. It's another tool, isn't it, to help you kind of gauge how you're going to perform over the next week, 4 weeks, how you break it down Monday, Tuesday, Wednesday, Thursday, Friday. You know what your risk is. Yeah. So actually, what's the risk? I think the risk allocation needs to be 10,000. Let's just put the numbers in, and because it's all set, there we go. Risk allocation. You just punch in some numbers, and it gives you a breakdown in terms of risk to reward. It gives you an idea of this. This is good. This section here. I've put the link in there because I've got a video. I did a YouTube vid which covers this, and like I say, you probably see this. You'll see it out there. Everyone's got one, or everyone's copied it now, I think. But because
I thought you were the guy that was on the video doing this.
yeah, I am on the video doing this. The video I've just shared the link for it, but I know that there are ones which are very much similar, using a similar format out there now, because especially this year with FTMO. So
Right.
so I thought it was important to share it and put it out there as well, because there are people wanting to do these challenges. You know, it is attractive, isn't it? If you can manage a lump sum of money. Yeah,
I've seen one of that, Alex. I think it's Kiran. He's also an 15000 trader.
is he the bald head guy, the guy with no hair?
Right. Yeah, that's right.
Yeah, I've seen him as well. He's alright, isn't he? He's a good guy.
The same. I think the same code that you got there for the Excel sheets.
Yeah. So not actually, I don't know. But yeah, I mean, I just think that this is useful. It's a useful tool. I mean, look, quickly, just go over it. The breakdown's really good. So, you know, you're risking week 1, Monday. Is that right? 25% over.
Monday.
Is that, I don't know. Is that right? No, I think that's profit target. Max loss is 10. That's all good. That adds up. I'm sure I'm missing something here. I know that. Oh, here we go. Yeah. So Monday, week 1. Risk each day £500 or $500 is your maximum risk every day. You're risking 0.5% to try and maybe make, I don't know, 0.5% or 1%. You know, if you could make 1%, then you'll hit your 10k in 20 trades. Appreciate that you're going to have drawdowns, you're going to have losses. Also, you have to factor in there's going to be some good days as well, some bread and butter days where in a week, you know, say it happens on the Tuesday, you're risking $500, but you end up making, I don't know, a 2.5% or 3% risk to reward ratio this here, and you're getting, you know, 1 to 3 return. So you're risking 500 to maybe make 1,500. That's a good day, isn't it? That's 1.5%, and or maybe even $2,000 or more. I mean, you're going to get days like that. We've had days like that this month. This month's been exceptional for days like that, because we have had some big news that has driven the markets, especially with the indices and especially with gold. So we've capitalised on that. So yeah, but as a rule of thumb, as an Excel spreadsheet that can sort of give you an overview and sort of keep you in the check and keep you in check, keep you looking at risk management and keeping you on track. Risk management is so important. It's the biggest thing alongside your psychology. If you've got the correct risk, it will help your psychology, because your emotions will be, okay, look, I'm struggling here a little bit, but I haven't over leveraged. I had a message. I've been getting loads of messages, particularly this week. I had one. I logged in this morning, had a look, and guy said he wrote something. He goes, I wrote all this out of desperation. I hope I did not waste your time with all this like essay. He wrote an essay. I said, you could just send me a voice message. It's a lot easier, because that's the good thing about using Telegram. Just send little voice messages. He says, I don't know where to start, but he's been struggling. And when I talked about the Pearson's law concept, where you measure your performance and you take it one step further and you measure your performance and report it. So have like a mentor, or like if you want to get in shape or lose weight, you will monitor yourself. You'll weigh yourself every day. You'll focus on what you're eating, nutrition. You'll look at your exercise regime, and you'll monitor, and that will help you achieve your goals. Right now, if you take it to the next step by employing a coach, a mentor, a fitness instructor, someone who's actually going to be, you're going to be accountable, taking accountability, and you have to report to that person, and you feel compelled to actually have to share your personal journey with someone, do you feel more compelled? Your results will go up exponentially. That's why people sometimes will say, oh, it's a waste of money, a waste of time having a coach, but it's not. If they're good at their job and you commit, they'll hold you accountable, and so you'll achieve your results a lot faster. You'll see, doing it by yourself. If you have good discipline and you can stick to the rules, maybe you'll see 20-30% increase or improvement. But if you have a coach or someone to sort of someone that will hold you accountable, then yeah, your results should go up exponentially. You might have 50, 60, 70%. It will go up. That's just life. That's just the way things work, isn't it? It makes sense. There's a lot of trading and a lot of things that we do. It's just common sense. So you need to employ a lot of common sense in everything you do. So I've been getting a lot of people sending me messages. Look, can you help me? And I've been saying, yeah, sure. I can give you some assistance and some guidance. And he goes, my life is on a blender right now. And I just felt, and he goes, I'm really frustrated. He goes, my relationship with my girlfriend, who I really love and been with for 2 years, and it's just all going to pot and everything. It's just, and then it's compounded by the fact that he's been paying for courses, and he thought he found a mentor who he paid to do their course, and he feels like he's outgrown this mentor. He's taken everything from this person that he could learn, and he's come to realise that actually their system and their strategy is not really going to make any sort of life-changing returns, and he's feeling a bit demotivated. And I said to him, what's your risk management like? And he said, well, that's because I get frustrated and emotional, and he lets the psychological element creep in. He has been increasing his lot sizes, and he ends up with like a 20% or 50% loss. And so he goes in hard because he's trying to revenge trade. He's trying to claw back losses, and it just becomes a mess. And and then when he does see some improvement and some wins, he thinks, yeah, cool, this could be the starting point, the changing point. So then he tries to go hard again, and then he loses. So he ends up making 10% and losing 50%, and it's just a mess. So having these gimmicky tools, they are actually really useful, and they are of value. And I would say just trust the process. If people say you need to have, I don't know, something like an Excel spreadsheet or something to help you break down your numbers and to keep tabs on your figures, appreciate that, companies do the same. A company will have spreadsheets, will have data, will keep statistics to run their business. Yeah. And so you need to go and approach trading from that angle and say, right, this is a business. I'm going to start a business, a trading business. I'm going to aim to see growth and gains, capital, gains of say 1% a day. And that's what our target is going to be. And now if you were a company and you were saying to your team, we're aiming for 1% a day, let's go out and get it. That's it. That's the job, the task that they've been given. They'll go and achieve it. Of course, they may not achieve 1% a day. Some days they'll have a bumper day where they've just managed to, close some amazing deals, 3 or 4, and they've had, people will have a great day, and all of a sudden they've made 4 or 5%. It's the same principle. You're approaching trading from a business point of view. So these tools are really, really useful, powerful, and I say use them. So you have that, and then you have things like a trade journal, journalize you know, journalize each day. I've done it along. This is really simple stuff. It doesn't need to be fancy. These are my results. These are my targets. You know, I give an idea as to what strategy I'm using, what instrument I'm trading. No trades these 2 days. And then this section is quite big. It accounts for over 50% of my journal because it allows me to write little bits of detail, like when did I take the trades, what happened, what was I thinking, just everything really, just whatever. And it's not that you're going to necessarily remember everything you write down, but by putting stuff onto paper or writing, it's a process that you're going through, that you are implementing some form of structure and discipline and routine, which is really, really important, because without routine, you'll sit there, you'll overtrade, you'll be trading out of boredom, you will be doing all sorts because, you know, you're not following a plan, you're not following any set of rules, you don't know what you're doing, basically. You're just sitting there having a punt. And we spoke about this yesterday, that trading is 80% of all of this. You know, addressing self-development, making sure you go to bed on time, get plenty of sleep, eat properly, drink plenty of water. You know, the basics. Exercise is important, and do that. 80% is all about that, and the 20% or less is about actually putting a trade on. So you do all that work before you build the foundation, so that you're in prime condition to actually do that trade. You think of athletes, they do the same. They spend years and years and years training for a big event, like football players, training for the World Cup that comes around every 4 years, or whatever, athletes training for competition. They put in months and months and months, don't they? For like that one moment, that one day that might last minutes. That's what trading is as well. It's the same thing. We sat here on, what day is it? Friday. We sat here Wednesday, I think, and we were talking about certain things. We were going over analysis on pound, yen, gold, things like that. And then all of a sudden,
Like for example, sorry.
no, I was just going to say, all of a sudden we had a setup. We had a setup on gold. I was like, oh look, it's retraced 50%. Let's take a short here. We got in, and it was a sniper entry. It dropped straight down, straight into profit. There was zero drawdown. We didn't have to wait for it to go up against us or anything. It went straight down, and we just made some instant profit. And that's what trading is. And pretty much, having done that one trade, you could probably argue that you're probably done for the day. So you sit on your hands for most of the time, and you observe and you analyse, you scan the markets, you look for setups. You can use the internet now to chat in different groups that we're in and share your ideas with other traders. Spend your time doing all that, have a bit of banter, a bit of fun. And then when something does meet your criteria, sets up, you take the trade, make your money, job done. You're in, you're out. You know, that's it. Great. And that's what trading needs to be. That's the process. If you're not doing it like I've just described, you need to be doing it that way. If you're not doing it that way, that's where you need to go to start looking at addressing that as an issue, because you're not doing things the right way. You know, you're not supposed to be sitting staring at charts, taking trade after trade after trade, and spending 80% of your time trading. I have to take a trade. I have to put money on. I have to make money. You know, and 20% of your time spent doing all the other things which we just talked about. It's got to be the other way around. You've got to be doing 20% physically putting a trade on, or less, and the rest of the time is all of this stuff. It's constantly making sure that you are primed and fit and ready for an opportunity. You're always in that perfect position and condition to make the most of an advantage. You know, find an opportunity and take advantage of that opportunity and make money out of it. And that's how you trade. That's what this business is about. So you sit in your hands for most of the time, and they say if you sit in your hands for 50% more than what you do, usually you'll be a lot more profitable, and it's so true. And that's what they're saying. So I hope that helps. I hope you don't just think, oh yeah, okay, that makes sense. I hope you actually take action and do that and start doing it. And if you're unclear how to start, because that's the hardest part, actually starting. But there's no time like the present. Make a start on it. Get a demo account and start doing it. If you need a hand with that, then just give us a shout and I'll help you. And you can send me a Telegram message or something. yeah,
I
so
have a question.
yeah, go for it.
Would you say that realistically, checking how your current performance is would then you would then make a decision based on that and whether you're ready to take the challenge or not? For example, if I were to go back 4 or 5 months of my current performance as
Yeah, that's enough, isn't it?
percentage increases
Yes, that's all
per
right.
month, um, I wouldn't. The thing is, I'd say realistically, I'd say 10% is actually quite a lot to achieve based on my performance.
Yeah, it
But
is. It is.
I'm
Yeah.
averaging, I'm averaging about maybe 6, maybe 7.
Yeah, no, yeah, I
Um,
remember you saying that the other month. You made like you were up about 7%, floating at around
yeah,
7. So yeah, that's a big factor. I know there are other companies out there, prop firms that don't necessarily have a minimum threshold. I think there is. Somebody said about 4x4
The
of
traders,
or
they can
T4T
achieve like
T4T
7%.
T4T. I think they're called T4T.
right, right.
On two
Because
traders, you gotta achieve 7%.
I'm just thinking realistically, if I'm not hitting 10% right now, it, I can't see how I would hit 10% on, let's say, for example, on the FTMO because it's the most straightforward. It is not the best for like for a first like for it to
No, it's not because you think, oh, okay, but what their argument is, because I said I did sort of raise this with other traders, and it seems that their idea, which makes sense when you think about it, it's obviously trading is subjective, but their idea is that if you are to be a consistent trader, and we're looking at the bigger picture, so we're looking at 6 months or 12 months down the line, and not just the immediate challenge and the immediate month. They're saying that if you're going to risk like 1% or 0.5%, which is what traders risk, isn't it? 1%. You always hear about the 1% rule. If you're
yeah
sticking to that and you do that consistently in the first month and you pass the challenge, and then you go into the next 60-day challenge and you do the same thing and you're consistent, and then after you've achieved that and you've been given a real fund to trade and you continue to do that, risking 0.5%, 1%, and you're making money and you're consistent, that is what they're saying that they're looking for. They're looking for consistent traders. They're not looking for traders that can beat the challenge in 3 days, because you keep seeing these YouTube videos on how I passed a challenge in 3 days. It's like, well, yeah, you must have been leveraging the crap out of your account to
Can I
do
make
that,
a point?
or you may have got on a good trade
I mean
that did it.
it could be
Yeah,
yeah anyone could you could just
go
get
on,
that one
Luca.
trade, can't you?
Yeah,
On FTMO, if you don't achieve the profit target, and for example, if you don't hit the daily loss and the maximum drawdown limit, you can try the FTMO challenge again for free.
yeah, I know they give you a retake.
yeah, we know that, but
Yeah,
that's not where you want to be though. That's not
no, of
really.
course not.
It's pointless doing it like that. I mean, obviously that's like a fail-safe. But we want to be passing the challenges. We want to be cutting through all of that nonsense and time wasting, and you want to be passing it. Anyone who spends money, they want to be looking at the bigger picture. But I think people forget sometimes. You want to think where you want to be in 6 months' time. In 6 to 12 months' time, if you're passing this challenge and you're consistent, you won't be able to make any money for the first 2-3 months after passing the challenge. Like, I mean, withdraw money, because you need to keep that money in to build up a buffer, so that when you do have a bad month, you know, your 100k account is sitting at about 120k or something like that. So you've got $20,000 to play with, for example,
Yeah, of
as a
course, yeah.
buffer. So if you have a crap month and you lose 10%, you know, you're going to lose what, $10,000, but you've still got 10k in profit. And you know what I mean? So it's about accounting for that, because if you start taking profit after the first month, and so you have, you know, you make 5% profit, so you take 5 grand out and you're back to 100k, you give them what, 2k, and you keep 3k, and then the next month you have a really bad month and you start losing and it goes straight into negative 90 something thousand. If it drops to 90, they'll take their money back and you lose it. You've worked so hard to get to trading live to start making profit, and the minute you drop into negative, you're not going to make anything. And if you exceed their 10k limit drawdown, or whatever 5k maximum daily drawdown limit, you're out of the game.
Yeah.
They're not going to give you another chance. They won't give it to you then. They give you another chance initially, but they don't give it to you when you're alive. So I've looked into that, and I've spoken to someone who passed the challenge, and he was trying to then build up the account, and he went quite hard instead of taking his time, because that's how he'd been trading the account to pass the challenge in the first month, and then the verification. He'd been trading quite hard, quite aggressive. He hadn't been doing 0.5% risk or 1% risk. So when he said, I was supposed to, now that I've got this money, I'm supposed to be doing 0.5% at 1%, but I don't know why I didn't. It was like, I think you didn't because you hadn't been doing that from the offset. You hadn't got yourself into that habit, that routine. So routine's so important. And so then they ended up going too hard, and they lost their account. They lost it after doing all that. They lost it in the first month of being live. And it was, you can imagine, it's really frustrating. Yeah, he just got himself into a bit of a rut. There's somebody at the moment who's got 3 accounts on the go. He's got $300,000 on the go, and I think one's doing okay. The other 2 accounts are like down 6 and 7%, something like that. I'm going to speak to him later today.
I mean, realistically, I personally, because I'm not used to handling that kind of money, there is no way that I would take the 100k challenge. I would take the 10k challenge because
I said this. Yeah.
Psychologically, there is no way I can't handle. I know I can't handle 100k. If I see 100k in front of me, I'm gonna start shaking. I'm gonna start shaking, and I'll end up losing it. It'll have power over me, and I'll either not trade it because I'm too scared.
I think it's good to be realistic. Yeah, be realistic, because a lot of people will be like, what's he talking about? I can handle 100k. It's like, yeah, your ego can handle 100k, but you can't handle 100k. I wouldn't give you 100k of my money. I would not give you 100k of my money. I just wouldn't give it to you because you're not equipped to deal with it. You haven't proven to yourself or anyone that you can do it. This is your ego talking, saying, yeah, I'm going to go for the 100k challenge. I'm like, why don't you just spend a little bit of money and have a go with the 10k? That way, £10,000 is, how much is it going to cost £10,000? About 140 quid. So 140 quid. Yeah, so you're having a go. There's no stress, no drama. Bit live money, getting, yeah. Go on.
I like the point he raised. Like I've been training on 50k challenge.
Okay.
And I've been passing the demo challenge.
Oh, good.
But when I wasn't passing it anymore. Like I was trying to minimize my lot size, follow it up. Likewise, when I went up above 50k to 100k challenge, I was just messing the whole stuff up. But whenever I do that 50k challenge, I get it right.
Yeah.
No stress, no
And
pressure.
Andy's just raised a point as well of the same thing. Andy's saying, yeah, but it's the same thing in percentage. So if you just focus on percentage, it doesn't matter as long as you stick to the percentage. And that's so true. But you're
Some hidden rules in this.
yeah.
I have one more point to make.
Yeah, go on.
There are some hidden truths, hidden stuffs about these prop things, like funding talent. They want you to stick to one pattern.
Okay.
It's not just about making profit or not hitting daily loss. If they notice you are using 10 lot size per day, all of a sudden you shoot it up to 50. They might withdraw your account from you.
Okay.
They might withdraw it.
Okay.
You can verify this statement.
Yeah,
Funded
they are
talent.
like.
I've heard people say that, and yeah, I've heard people say all sorts of stories about how people haven't been paid, the different things. So you need to go with someone who's been a trusted prop firm who have shown that they are okay and consistent, and someone like FTMO seem to be doing good things. And just to touch on that point that Andy's made, it's really important. He said it's the same thing though. So whether you have a 10k account, a 20k account, a 100k account, as long as you are, your risk is on point, you should be fine. But that's true. Only half of that is true because you're not taking into account, maybe 20% of that is true because you're not taking into account the fact the simple fact, and this is a fact, that you all know it, is emotions, psychology. Your psychology, like we've just been talking about it. Doloran, you've just said about, you'll be scared, you'd feel nervous, anxious.
Of
So
course, 100%. Any if you've never dealt with that kind of money before,
yeah,
it's money we're talking about here.
yeah.
If you've never dealt with that kind of money,
Life changing money that you're sitting there and life changing, and you're like, wow, this is an opportunity, and it's like winning the lottery. And you hear so many times about lottery winners ending up losing friends, relationships fall apart. Within 2 years, they're bankrupt, and they're probably even in debt, and their life has just fallen apart because money has ended up bringing them a whole lot of hardship, because they weren't equipped to deal with money, to understand money. You're not born into it. They're not calm about it. And so, an example in the trading world, you have these guys that are trading big lots, and they will start with a 5k account, and they'll do a video and say, follow me for 3-4 weeks. I'll turn this 5k account into 200k. And they can do that. You can't do that. They can do that. The reason they can do that is because they're already driving their Lamborghini. They already have their nice house, and they already have their Rolex watches. They're already loaded. They've already proven over the last 8 years of hard grafting that they can trade, and that they have a shit ton of money in their bank accounts. They don't care. They're going to chuck they chuck 5 bags at this, and they say, right, I'm going to have a go, and I'm going to show people, look, I can do this. And you look at their drawdown, and their drawdown's like 50+% drawdown, because they don't care. They've been going in hard. But they flipped it. They flipped the account. They turned it into something phenomenal. And because they can. You can't do that. And so, yeah, Andy, it's a valid point. But I'd have to see, like for yourself, I'd have to see you actually do it and see if your emotions don't affect your robotic kind of machine approach, which is how we need to be in theory, but actually putting it into practice. Suddenly you've got 100k in front of you, and your challenge is to make 10k. It's like, yeah, do it. See if you can.
Handle more than
You can do it.
200. I never.
200, yeah. What, 200 euro?
Yeah.
Yeah. It's important to appreciate that, and everybody's different. Some people do have they are very in check with their emotion. They're very balanced, and they can follow rules given to them. They are very good at doing that. So you need to identify what sort of person you are, what sort of personality you have. There is Baby Pips. Go to babypips.com. Let's have a look at this actually.
I prefer reading books, actually.
Babypips.com. No, this is about the personality challenge. Someone was asking me about sleep.
I took it.
Oh yeah.
I'm a scalper. Yeah.
Oh, are you a scalper? I thought you was. I saw you doing Babypips. Babypips.com. I thought you were doing like trades where you're looking for 100 pips. How is that? How are you a scalper when you're trading like pound Aussie looking for 100 pips? It doesn't make sense.
I saw that when I saw the results of the quiz. So I don't know, man.
Personality
Try
test.
scalping again.
Okay.
Yeah.
Does this work? Trainer consultant. Why is it not Baby Pips? UK psychometric testing. That's a good one. These are adverts. These are not. What's this? Do I have to scroll down? Which currency should no personality? Is this the one? This is it. What kind of mechanical system suits you? Suits your personality? Is that it? You should go with a trend following mechanical trading system. No, 7 quizzes. Trading style, discretionary, mechanical. That might be it. Go on Baby Pips and have a little look around and just see what kind of stops suits your personality. See, they've even got quizzes about that as well, about stop losses. I think there's some useful tools here within this to understand what sort of a trader you are, whether you are a scalper, so in and out very quickly, whether you are a day trader, so you can place a trade, put your 1% risk on, wait for it to give you and achieve 2% risk to reward. It can go into profit, but then it can fall back into drawdown. You can go and test your stop. You will just sit there and you will suck it up, and you will just say, okay, look, it looks like it's going to hit my stop. and maybe you'll
The
just
link
cut
is
the
on the
loss.
chat.
So you need to understand that, or whether you're a swing trader, because you're working, you have a day job and you have other commitments like family life, and so you just want to put a trade on, set and forget, and so you've put 100 pip stop loss and maybe a 200 pip target, whatever it is, and establishing what works for you. Again, there's that work you need to do. And Andy, what sort of trader are you? And have you done one of these challenges, or have you been trading long, or are you okay with your trading? Do you find that emotion doesn't really affect you? Because what you're saying is true for me, but is it true for a new trader? I'm not so sure. I'd say for a seasoned trader, yeah. And I still am affected in exactly the same way as any other trader. I still sit there sometimes stressing at the screens because the trade's not doing what I want it to do, or the price action is not right. So I'm feeling a little bit annoyed about it, but that will last for all of
I sent you the link in the
five
chat.
five
It is in
minutes.
the chat.
Oh yeah, good. Okay, which trading style is best for you? There you go.
The
Yeah, it's
Zoom
good.
chat.
Whereas I had some trader, I think last year, he would get really, really, really depressed and really stressed out because he was in a drawdown, let alone having a loss. He was already stressing when he was in a drawdown, and as soon as he had a loss, it was like the end of the world for him. It was the end of the world. And he hadn't lost his life savings. He was maybe losing a couple $100 or €100. I think he was doing euros, and it was money. Don't get me wrong. But he had like a 10k account or 2k account or 5k account. He had a couple of different goes and different amounts from what I remember. Because I think he gave it a good go. I don't know what he's doing now, but trading just wasn't for him. He was proper stressing, and I was trying to speak to him about it and say, yeah, you need to appreciate that a lot of it is to do with emotions and psychology, and how will it affect you when you are in a trade and it's not going how it should be going? How's it going to affect you? How are you going to feel about that? And he just, yeah. Well, he wasn't having it. He wasn't having any of it. He couldn't handle it. He was just get very pissed off. And I was just, seriously, I've never seen anybody do that. I mean, I know that people do, but he wasn't holding back. He had no filter. And it was like, mate, you can't trade. You're not. This is not for you. You can't lose your shit like that. This is, you're not gonna know. So yeah, there you go. So I think it's important to take into account the psychological aspect, because that accounts for 80% and the rest of what we do. But if you can, make sure that your risk is on point, and appreciate that size shouldn't matter as long as you stick to your percentage and say, right, I'm risking 0.5%. Whatever size my account is, it's 0.5% risk. As long as you do that, then yeah. So yeah, that's what. It's a good point. It's good points actually. Still trying to find your way, to be honest, in terms of how you trade. Try to do an analysis on the larger time frames. Yeah,
What
so
are you looking for? Okay.
top down analysis from like the daily, the 4 hour, I assume. Yeah, 4 hour and 1 hour. Okay. Executing the 4 hour 1 hour. I'm trying to follow a simple strategy. That's really good. 4 hour and 1 hour is recommended. They're the time frames that you need to pay attention to. Looking at this, you can see how price is on gold. You can see how we've come up to test a 50% retrace of the last swing, and we just pump up. So we took shorts there, it's just curling over nicely now. Last Friday we broke, and I think this Friday, by a week later, we'll have hit 1800. So I'm looking for another 50 pips, finally getting down there today, as we approach 12 o'clock London time. Hopefully we will be getting to that 1800. I've still got one trade that I've left on, and my stop loss is at 18, which is just above here now. This double top retest. Notice how price just stabbed up and just took out the last high. So any stops above there, people got stopped out. I know some people got stopped out And
Hey Alex,
yeah,
why don't you take the personality quiz? What is your attitude towards risk?
I don't need to. I know what my personality traits are. I'm not a patient person when it comes to trading. I want I want money now, and I think a lot of that maybe comes from having done it for for many years, and so yeah, so really I don't want to be spending hours and hours and hours looking at screens, at charts, because I'm just bored of it. I like my work-life balance to be more life and less work, and so that's important. So we look for setups where stuff is going to retest certain levels, and we get in there, and then it's, once the moves happen, we're done. Also trading at key times like the London Open, 7-8 o'clock in the morning. The New York session about 2:30 London time. New York opens, so we look at the Dow Jones, the US market. So trading key times, and that's it. So personality wise is about getting in, getting out, done. Are you going, are you?
Yeah, Chief. Yeah, I've got a client now at 12.
Okay, cool.
But thank you.
Where are you?
So I have actually go on a Zoom call now
Oh, cool.
after this.
That's
Yeah.
all right. Good.
Yeah.
So are you still able to give some coaching and training? And
Yeah.
he's a fitness instructor. He's a fitness instructor. Let's endorse you. Anyone wanna get fit? Just speak to this guy. Show them your muscles. Show them your six pack.
Yeah. Anyone around.
Dear.
Anyways,
Now
thank you very much.
what gym are you at? What gym are you at? Which one is it? Southwark.
Have a
Well,
nice day.
Fitness for Less is Southwark.
Southwark. There you go. London. Fitness for Less.
Number 4.
Yeah.
Less.
Yeah. See, for less, he won't charge you the earth for a six pack.
Yeah. Exactly.
He promises you muscles, even if it's just his muscles that you're looking at. But he promises you muscles anyway.
100% discount, huh?
100% discount. That's it.
Right. So once Alex gets everyone to make serious money, then you can come and spend it on me.
Yeah. There you go. There you go. You can start throwing him some dollars, some pound,
Exactly.
some £5 notes. Yeah. Good. All right. Cool. Yeah.
Thank you.
Yeah. See you later, mate. Bye.
Bye.
Bye bye. Have a nice day, man.
Bye.
So Andy was saying he tends to sit in his hands mostly and wait for the right setup before executing, and that's really nice. And how long have you been trading? A year, a month, 6 months? I'd say maybe 6 months, less than a year. Andy, about 6 months. Yeah, sounds about right. But that's okay. At least you imagine where you were. Or not imagine, you think back to where you were at the start of your journey, and trying to make sense of it. And then 6 months later, you're kind of like, okay, I've brought some structure in. Everybody learns at their own pace, and I said yesterday that we'll share strategies and analysis, and I appreciate that we may need to explain and then explain again another 10 times before it makes sense to some people. That's okay, because I know that I'm one of these people who likes things explained multiple times till it actually sticks and makes sense. So I have no issue people asking the same questions, because everyone learns at a different pace. And I've pinned that message to my Telegram group as well, because it's important for people to not feel intimidated or shy or a bit nervous or reluctant to come on and vocalize if they have concerns or want to check something else. So by all means, use the chat just to send some messages if that works for you. And so ask any questions, and let's dive into some analysis. Let's look at stuff that's setting up or playing out. Or so, does anyone have anything that they want to look at or go over in any detail? Or, the time that I'm.
Good question, man. Oh my God.
What's
How
that?
do you determine your position size for each trade? If I'm feeling extra confident on the trade, I'll just bet the farm.
Bet the farm.
Okay,
Did you
yeah,
say?
please, please.
Okay. We'll be joining back on calls next week. Haven't looked at the market since yesterday. Okay, not hoping much from the markets either. Yeah, that's. I said that last week. That's why I finished early last week. Finished by Wednesday last week because I knew we were going into Thanksgiving. Volume might not be great, but I did say. I think I've repeated this a million times. Obviously, I was going to save some bullets for in an event. In the event that gold breaks 1850, which is what I thought it would do. And so we had that stabbed down on Monday. We were short here from Friday, got in over the weekend looking for it to maybe do something with further good news coming out regarding the vaccine. So it's nice to get ahead of the curve because that's what the banks do and the institutions. They have to put in vast amounts of money into orders, into getting their position on. And so they're the ones taking all the risk to make the move happen. We as retail traders are much more flexible. So one of the pros and cons of being a retail trader versus an institutional trader is simply that as a retail trader, you are like a jet ski, you're like a little speedboat, whereas they are more like a cruise ship or a tanker. It takes a bit more to kind of steer it and move it. It's a bit slower in the water, whereas we are very, very agile and we can get in and get out. So use that to your advantage. Your work-life balance should be your own. So, you come in, make some money and finish. Once you hit your target, say you make 1% or whatever it is you want to make, finish for the day and go and enjoy your life. If you work for an institution, you can't do that. You can't just say to your boss, right, I'm done now. I've made your 1% that, I'm gonna finish early for the day. It doesn't work that way. And so, yeah, 14 hours later, you're still there. You've traded the Asian session through to the London session, going right through to the US session, and then you clock off and then do it this all over again the next day, especially as a junior trader. Quick questions on your indicators. Actually, never seen any of them too before. Just wanted to see how you use them. I was just testing these. Actually, these are something that were given to me by another trader. So yeah, it's good that you asked. This one. This,
Alex,
yeah.
are you not on your list to look after some traders within the group who are profitable enough and then, look for them and help them fund for the FTMO challenge and, having to have a good win-win for the outcomes?
Yeah, I've been doing that over the last 2 weeks. Yeah, I have been. Exactly that. I have been. I just said that as well, didn't I? Saying, don't be shy. Don't be shy
So
if you.
ideal is, helping them
I'm not physically gonna. I'm not gonna physically jump on your account and take a trade, but I will. I will help you. I mean, helped one of the guys. He passed the first part of the challenge and he did it, and he did a video, didn't he? And then he just got himself into a bit of a rut. But he got into a bit of a pickle with his second part of the challenge. He's got 60 days to make 5%. So double the amount of time, half the amount of profit. Much easier than the first month where you have to do 10% in 30 days. But he blew it, and he got right down to, he had like, I said, show me your account. He had like 4 positions on. He was over trading. He was, you don't realise that you're over trading, and he was losing on all of them, and his account went to about 92,000, and then then he tried to short this gold setup. I said to him, focus on gold. Let's have a look. If it breaks, then there may be an opportunity because it's going to do something like this. It's going to tank, and we can make some money on that. And he couldn't sit there. He was like a little kid. There were a few traders that did the same thing. They were very fidgety. They couldn't sit still and wait patiently. They were like, it was like taking a 5-year-old to the hairdressers to the barbers to get your hair cut, and they had hair down their neck, and it was itchy, and they were fidgeting, and while it was doing this price action with gold, they were jumping in, they were jumping out. Somebody even said, "Oh, you know, I was waiting for it. I thought I'd take some longs." They went long on it, and then it tanked on them, and they got caught out, and so they had to cut those losses, and you know, and they'd had a great. Sorry,
Where did you enter the trade?
me
At which point? Yeah.
there 75. Why do you ask the questions when you know the answers to them? If you do less talking and just pay more attention to what I share with you, because I share loads with you, Luca. Every day I chuck so much information to you, and
didn't know
I
them.
yeah, man, I've given you all this information, and over
I really have.
over the last 3-4 days, you've been asking me questions where I've given you the answer, and I'm thinking you don't read anything. Why am I sharing it with you personally, sending it to you if you don't look? I said, you're such a funny guy. I said, you continue to make me laugh because I just, you know,
Come on, don't be mad.
I'm not mad. It's just, come on, you need to pay attention more, talk less, pay attention to what we're doing. This is a serious business. There's money to be made. You can see on my chart here, 1875. Can you read what it says on the chart? 1875 entry. This is the trade right here. It's right in front of you. And, you know, this is the money that was made. If you didn't make any money on this, because, you know, you asked me this 3 days later. We got in on Friday. You asked me down here. You said, "Oh, can I get in on gold?"
I don't even remember.
Yeah, I do. Yeah, but it's like you asking me to short. Can you get in gold? You wanted me to help you try and find an entry on gold when it moved 800 pips. You know, I'm just thinking, mate, come on. This is serious. All this back testing you've done over the last 3 months, I expect more from you. So I'm on you a little bit, and I expect you to be doing it now. You just said to me you want to do the FTMO challenge in the new year. So I'm worried that you're not going to pass the FTMO challenge in January because you said you want to be doing it for the new year. You get some money over Christmas and you want to do it, but I don't think you're ready. So I need to be honest with you because I don't know, other mentors, they won't say anything. They'll just let you lose your money. And I don't want to see you lose your money.
Just because I didn't see your entry?
Yeah, because of that, just because of a million other things as well. It's like, just, yeah, on point with it. It's everything. I've got to be on it a little bit with you because I want you to succeed. I want you to make money. Because you need this money to be life-changing for you, to improve your life, to help your family. You know, you've told me about, you know, your personal things, your mum, you want to do things for them. There's a lot of pressure that you've got on yourself, that you're putting on yourself. And so I can see that being quite, affecting you. So yeah, I just, if I give you some information, maybe write it down. If I take a trade, maybe get involved in that trade. Whether you take that trade or you don't take the trade, pay attention to that trade. Take some information from that trade. If you were paying attention to this trade that I've only been trading this gold all week. If you were paying attention to it, you would know where my entry was. You would know how much I've made from it. You would know all this information if you were following along. So I'm just saying, maybe pay attention to what I'm doing, because if I'm making £100,000 on gold, I'd expect you to be like, okay, this guy's making 100 grand. Let's go and see what he's doing. Let's go and investigate as a trader. I want to make 100 grand as well. What do I need to do that? So yeah, I'm on you a little bit because I want you to succeed. Whereas maybe other mentors will say, here, let me charge you $300 for my course and let you get on with it.
Pull the trigger.
Yeah, pull the trigger. Yeah, exactly. So yeah. Anything.
How much was your
Yeah.
risk to reward on this trade?
Oh, I don't know, about 1 to a squillion, isn't it?
Did you say that?
Yeah, I don't know. It's a lot. It's been a lot. The risk to reward hasn't really been anything to even pay attention to be fair. If we looked at this move, and we said the stop was originally 100 pips, so it was from 75 to 85. So 100 pips it's a 1 to 8 risk to reward. 1 to 8. Risk 100 pips to make 800 pips.
Very good.
I think I've made more than that. Maybe, I don't know. Whatever. I think I made 1,000 pips out of it. If we think about 1%, and we're saying 100k, 100k on a million account is 10%.
Yeah.
We've done over that so far, and we've got a trade running still, which is currently floating. Where are we at with this trade? It's 18, 21. There you go. It's been fluctuating between sort of 18 and 21. So 18 to 21. Yeah, let me share that with you now. So yeah, you yeah.
I would have entered on this bearish engulfing. Is it wrong or right? For me, it's right, you know? 'Cause
Yeah, but that's
I
that's
didn't
what I expect. That's what I expect you to do. I expect you to have someone who's offering you a free help. Maybe if I start charging people silly money, then people will then start paying attention and think, well, I've paid money for this. So by paying money, they want to get their money's worth. But by offering it for free, people just kind of bit too laid back, a bit too complacent, and just thinking, well, you're not going to win any money. You're going to lose. You're not going to make any money. You're not following a set of rules. You haven't got that military discipline. You're not going to sacrifice your entire life to make this work. It's not, you talk about it, but you're not going to actually do it. This is what I
Producing the demo, huh?
sorry? Yes, exactly.
One of the guy in your Telegram is telling you that you're using the
That's all right. People can ask questions, and they can challenge things, and it's good. I want to see people do that. I want, there's a lot of rubbish on social media, which is just funny to watch. I find it hilarious. These guys work hard to market themselves so that they can earn $30,000 from their subscriptions every month, because they're charging you, $150 for their monthly subscriptions. So I'll charge you $150. You can take everything that you need to learn from me, because you will pay attention then, because you just spent $150, and maybe it will make you a better trader, or maybe it'll just be $150 out of pocket. But these guys, they're creaming it. They're making 30k just from that. They charge anywhere from like 300 to 1,000 for the course. Then they start selling merchandise, and they're doing very well. They're doing very, very well. You can see year 1, year 2, year 3 how they've just progressed, and by sort of 5 years in, they are millionaires living very comfortably. And yeah, it's very, very good. Yes.
Can I ask you another question?
Yeah.
In regards with, because you are the same in the UK, right?
Yeah, I'm in the UK. Yeah.
And in regards with the tax, are you creating it with HMRC, or you are just using it with your own name?
I have a couple of different ways. Yeah, but that's stuff that you need to kind of go and really understand and talk about with an accountant. Definitely, if you become profitable,
Yeah.
you want to you definitely want to then speak to an accountant, somebody who
Current status now, you are building it with your name, or in your company's name?
to be honest, it's not something I'm going to discuss and record and put out there. It's just personal stuff. It's private. But there are options. I think these options have been disclosed. Even like Morgan saying, like, get a professional to help you save the money, there's so many YouTube videos about stuff like this, and these questions have been answered all over the internet, and people have answered them in the groups as well, and they're not really saying anything different, or they haven't failed to explain something. If I thought they hadn't explained it, I would have maybe made a video on it, but there's nothing. It's no big deal. I think if you have a business, you pay tax. You have a limited company, you pay some form of tax. And I think paying tax is not a bad thing. You want to make money, but you don't want to contribute to society. You just want to sit there and make money for yourself and not give anything back. But you want to leave all the lights on and expect the rubbish people to, the bin collectors to come and collect your rubbish and keep your streets clean and to fix the potholes in the road and to have this comfortable lifestyle. But you're not going to actually contribute towards it, and that's just wrong and greedy, and people like that, I would expect them to, well, I hope that bad things happen to them and karma catches up with them. You know what I mean? It's like that. That's got no time for it, because it's not necessary. It's not necessary to be that kind of person, because you do that with that, and you'll be like that. Your attitude with everything that you do in life, and that's you're not giving anything back. And yeah, so yeah, not to mention it's different for every trader, and
Yeah, yeah.
yeah, it might not work
Thank
well
you,
for
man.
you.
Thank you, man.
No, but I think it's a relevant and important question because you need to. It's not about dodging taxes. It's about understanding what you're liable to pay and how much you're going to be doing. And it makes sense, isn't it? You work hard for your money, and you want to know. You know, some countries they want, and it depends the country as well. Some countries they want a lot from you. They want, and other countries are tax free. You don't have to pay anything. There's no tax to pay. You're in a tax-free tax haven. Yeah, so it was a bit of a weird question and a very important one. But yeah, sorry I can't go into detail in more detail because I think every scenario is very very different. And but yeah, good. It's it's important though. It is important. Definitely important. It'd be nice to get to that position. I tell you, if you get to a point where you're making lots of money and you have this issue where it's like, I need to pay some taxes, then you know you've arrived. You know you've arrived. You know you're making, you're doing well. You know you're doing well when you, well, yeah, you need to pay taxes to make sure that you have street lights. You have your rubbish is being collected.
This doesn't work in Brazil.
Well, I'm sure it does and it doesn't, but I know.
Yes, it works.
I know. But hey, if you're making lots of money, maybe you can then choose where you live and do,
Yeah.
live the life that you want on your terms. You can maybe
I'm
even,
living in Spain, actually.
yeah, I know you are, yeah. Maybe you can
Yeah.
even build a house which is self-sustainable with your own solar panels, electric, wind farm, have a well where you can pull the water from the well and live off the grid and self-sufficient and have a bit of land where you grow your own fruit and vegetables.
I wouldn't like that.
Oh really? I
I
wouldn't.
prefer like it will be so lonely to me.
It's not about living lonely. I mean, you are allowed out. It's not prison. You are allowed to go and socialise. But I'm just saying, you live in a
Yeah,
house
but
which is.
in the middle of nowhere, in the middle of nowhere.
No, it doesn't even need to be in the middle of nowhere. It could be in the city, but in the suburbs. It could be anywhere. You just it's just no. I know what you're saying. You don't need You can have if you've got lots of money. I guarantee you'll have more than one property. Maybe more than one house. You'll have a summer house, holiday home. You might have a country retreat, a country house where you can go and get fresh air and get away from it all in the middle of nowhere, where you might just want that space in the middle of nowhere,
Good idea.
when nobody can see you, and you can walk around your house naked and jump into your swimming pool and do what you like because you've got no neighbours, and having that freedom is invigorating, and it is definitely definitely something that people should aspire to.
Freedom.
Yeah, freedom. Yeah, exactly. So let's answer this question about the indicators. I'm sorry we went round the houses there, but somebody asked, didn't
Like
they?
as I said, I would buy a house on a summer house, but I would be just living like for 1 month, just to do what you said, walking naked
Yeah,
and
yeah,
doing crazy things. Then I would go
yeah,
back to normal life.
yeah. That's it. Exactly that. So you want to be exactly. You want to be doing. You want to be thinking these things as well because these are your dreams. Um, you know, dreams becoming reality. It's make dreams possible. So yeah, okay, gold's going down. So let's look at these indicators. So this indicator is an RSI, and what we have here is the zero line. Is the line, the black line here is the line that we say if the price is above, it's bullish. If the price falls below, it's bearish. It's really simple as that. Above, bullish, below, bearish, and you can see here, look, the way it's gone down. There's nothing more to it than that. It's really easy, and that's a RSL, so it's a relative strength index of sorts. It's just set up in a slightly different. It's presented in a slightly different format in a different way. Then we have what we call the choppy indicator, the chop, which is really good.
Hey Betty, your mic is like
Yeah, Betty, your mic is going a bit. Betty, your mic is going a bit crazy. I can't do it. I haven't got the permissions. This is. There you go. Done. Thanks, Betty. Yeah. So this one is easy as well. This indicator has. This is the zone where stuff is happening. So this is the trading zone. Within this area here, this is where you're trading, and this is where prices is when you should be trading. When it falls back into this zone. When it goes out of this zone, either to the upside or the downside, that's when you should stop trading. And so you see here, this is a really good example. Let's look at this price action here. This is a 30-minute time frame. So let's maybe have a look at it on let's have a look at it on a 1 hour. Which, yeah, I mean,
What's the proper name of the indicator, Alex?
this is a chop.
Chop?
Chop. Yeah, chop suey. Chop.
Just a chop.
Just called chop, yeah. And the upper band, so the upper line is a 61.8, like a 61.8 fib. The bottom line is a 38.2 lower band. So that's why I really like it, because it's using the fib numbers. And so when it's trading, when the chop zone is, or when it's in this band between the 38.2 and the 61.8, that's when you can trade. That's when you should be trading. That's when stuff is happening. When it busts above, breaks out, or to the upside or the downside, let's look at it. It's interesting. I've only been back testing it for a few weeks. I've been looking at it really just to see, because I thought it was quite a nice.
Never heard of it.
Yeah, no, neither did I. A trader said, have a look at these. And I thought, yeah, let's have a look. It's interesting. So let's look at the big move. The big move happens. The RSL drops as well. Really good. So you can see it trading below that line on the 1 hour. And you think, okay, this looks like it might want to go. It's certainly bearish. You don't know what sort of move you're going to get, but it's bearish. Here, looks like we're going into the zone, and then it comes out. So when it drops out of this zone, that's when you stop trading. Or according to this, you would say, okay, wait for this to fall back in, or to go back up into this zone. Let's see if maybe I could make it wider. I don't know can we make it wider? Yeah, we can make it wider. There we go. And let's pull that up to there like that, and then let's pull that up to there like that. So we'll just make it a little bit bigger. There we go. A bit more clarity. Yeah. So maybe that will help. I think, again, for indicators, I only look at them as with something that Andy said. When you're doing your analysis, just look at the higher time frames. The 4 hour and the daily. So see how these indicators have played out on the daily and the 4 hour. So yeah, so this is it's in this zone, so this is where you want to trade it. It's going down, it's quite nice. And that ties in quite nicely with this move. And then yeah, good, really good. It comes out, so yeah, I don't know, yeah, just to give you an idea, I suppose, how you can then turn these into a strategy, or allow it, create a strategy using these indicators is something else that you would spend time doing. It's part of trading. You can have some fun with it.
I don't use indicators.
No, a lot of people don't. That's fine.
You think I should use?
Not really. No. If you want to use them, you can. If you don't really find any usage, or no,
Sometimes
then why?
I use moving averages. And that's it.
Okay, yeah, moving averages is cool. They're a form of indicator. So this is where we're at. I'm looking for 1800. I'm looking for a break below 1800. This is the weekly chart. Still further downside. This is the 4 hour chart. Looking for further downside. This is the 1 hour chart. Looking for further downside. Still bearish. Let's change this to a daily. I hope you found today useful and of value. I'm going to take a break, and I'm going to pause the recording and mute my mic and everything else, and then what we can do is we can just look again after. But if anyone has any questions before that, I'm just going to go get a cup of tea and yeah.
I have a last one. But
Yeah, go for it, go for it. Make it a good one.
leverage, yeah,
Go on.
only useful when the market is training, right?
What's that? What, the indicators?
Moving average. They are only useful while the market is training, right?
No, they are a form of support and resistance in the same way that a trend line is a form of support and resistance, and in the same way that fib lines, fib levels, your Fibonacci levels are a form of support and resistance, and in the same way that supply and demand zones are, your order blocks are a form of support and resistance. So if you encompass all of those forms of support and resistance and you can put them on a chart and it all helps in terms of confluences, because the more confluences, which basically means the more reasons to justify getting into that trade, the more you have, the more powerful the setup, the more the more you're confident about actually taking that trade, because because all the stars are aligned, all of the things are meeting your criteria, and it just makes it a high probability setup. It gives you that edge. And, with all of these things, the thing about trading, which everybody knows, or hope you know, is that even with all of these things, to give you an edge at best, it gives you an edge at best, having all these things, but it can still go against you. There's still no guarantees. It still doesn't make it 100% perfect, does it? It's still...
100% guaranteed, yeah.
It's quite funny. So yeah, it's
Okay.
you have to kind of appreciate that.
Thank you, Alex.
No worries, no worries at all. Let's.
So you can rest now.
Yeah, no worries, no worries. I think what I was going to say, in regards to the three strategies. Let's talk about the strategies very, very quickly, because what we have is, yesterday we touched upon it. We had here on the daily with gold. Let's use gold as a good example. We had the high up here, and then it's been consolidating, and then with the vaccine announcement, price fell over from the 50% fib. So this was the range before all of this happened. And with the announcement of the COVID vaccine on that Monday, I think the 9th, was it the 9th?
Don't remember.
Yeah, Monday the 9th. We were short on pound New Zealand and it sold off. Then we started shorting gold because of that. So yeah, this is when we start making our money, and that's what's given us an exceptional month. The best month of this year so far in terms of gains. So it did this, and technically it's gone up, and it's looked bullish, and it looked like maybe it was going to maybe pull back but slowly continue up and get up to that 76. But
it looks like a doji, right?
well, yeah, that one is there. That one is, and then this one is just struggled. It just struggled to get up there, and then we had this. So we had this move, and it pulled back 50% off to 50%. So it was really good. So structurally and technically, everything's perfect. Fundamentally, the fundamental news is giving you the reason why this is going down. Anyone who understands trading would understand and appreciate this is why gold is a safe haven, but in times of certainty or when things look good, then the banks will take their money and take their profit out of gold, because they don't need to hedge or hold it, because they announced a vaccine for COVID, so let's take our money and profit and run, because we've got a couple of 100 million invested in gold. We need to move that money out now. Time to cash out. They were just holding gold until a cure was found. Now that the cure's been found, this is selling off.
Recovered, right?
Well, yeah, you saw at the same time the Dow Jones rallied and it hit 30k at the same time that this came down to test 1850. But I thought, well, this isn't done to the downside. This is more downside. There's going to be more dumping. They're going to be dumping more of their money. They're going to be cashing out more of their profit. And so we needed to then explore this move here. So let's have a look on it, drill down to say a 4 hour and look at the analysis. Let's look at this move in a little bit more detail, a little bit more high definition. Let's get rid of these lines because they're just too many now.
A little bit crazy.
A little bit, yeah. That's okay, that's okay. So here, we wait for the bounce up. Measure this move down. There we go, and wait for the bounce up. So the first bounce up, we were saying this to everybody, 1894 is where we were looking for. Now the Tuesday morning I came in and I expected to see some form of retracement because we'd had a 1600 pip move down. So you expect to bounce up, right? So I didn't take the bounce up. I'm not doing a counter trend move, but what I will say is I would wait for the move to happen. So by about 7 o'clock or so, it struggled and it got to about 90 and it couldn't break 90, so 1890. So I was hoping it was going to get to 1894, another 40 or so pips to our first fib retracement level, the 38.2. But it didn't quite get there. So I remember noting that we stalled there and I said, well, this is very weak. We've had a big old move down. The fact that it has given us a retracement is quite something. And to be
It looks like a bearish engulfing, right?
well, yeah, to be fair, it did what I wanted it to do. It didn't quite hit the level that I wanted, but it still made a valiant effort. It's done very well to get up there. We're very bearish, so it's like a bouncing ball. It went down, bouncing up, so we want to get in on this and short it back down again. So that's what I did here. I shorted this first initial move from about 80, I think I got it at about 86 or something like that, and I shorted it. Let's have a look. What did I do? Gold.
Beautiful entries, huh?
Yeah, I got in at 1920 on one of them, and because we were going with the trend. 1887, there you go, 1887, 30 pips stop loss at 1890, looking for 1871, 1860, looking for 38 retrace 1894, so won't be aggressive on this trade. We'll focus on the 50% pullback. Taken at 7:43 a.m. I look at you know, taking this move. So if we drill down and explore that in a little bit of detail, because that's the start of the move, you know, this is all part of it now. We're well in an established downtrend. It's a bearish market. So you didn't catch anything on this move, but now the next day it's pulled back for you. Let's start looking at opportunities. Bearish market. Let's look at opportunities. Don't expect it just to bounce and go all the way back up. Why? Because of the fundamental news. This is because of, you know, we had this news. It's a game-changing piece of news. It's historic. It's historic news. So what we would do is we start exploring this price action and we start sort of saying, okay, let's move that out of the way. Let's get this up here a minute. I can't see it. Why is it? Here we go. So here. The retracement. Let's look at the retracement. It's gone to 1850. That's exactly what we wanted. I'm looking for 50%. So 1870 and a half. I don't know if you can see that or not, but
I mean,
let me get it
it
there.
is a little bit crazy, but I can see it, yeah.
Let's make it bigger. So measuring that retracement, and we're saying, okay, let's have a look. Let's use some fib levels and explore this price action. Let's let's see what's going on here.
A bunch of opportunities, right? On the
Well,
bounce of the trend line.
We'll just use some common sense here and sort of say, whoa, okay, what sort of a retracement is it? Well, 400 pips. That's a serious retracement. 400 pip bounce up. 400 pips. If you can't short a 400 pip move and make some money off it, then you shouldn't be trading. So common sense would have given you that. Common sense is often another confluence. Your common sense, your gut instinct is saying, you know what, this is bearish. Let's take a short because we're going to make some money here. And so it's just having the balls to do it, to have the audacity to and set it up. So, you know, and me, I wasn't looking for a full 100% because I knew it might do some of this messing about. But I did want to get an initial correction because it's coming into the morning, London, 7 o'clock, 8 o'clock. By 9 o'clock it fell over. and I was only looking for 50%, so 1870 and a half. So what was my target? 1871. So from 87 to 71 is 160 pips. Now, even if I'd cashed out early and taken 100 pips, I think I would have had a, I was feeling great, having exploited some, fantastic price action. So this is where we made money. Yeah, so opportunity was here, made some money, pull back, opportunity here at the start of the London session. I knew that come the start of the session, as we started going into Europe, the European session, the markets were opening, the banks are going to be there, something's going to happen, there's going to be some movement. So I got that, and then the rest of the day consolidated before finally the next day, Wednesday, we had another opportunity. And where did it get to? 76.4 area. And this is where the buying started to happen. And so I started looking at buys, and I got in at 1865, and my stop was 1860. Okay, stop was 1860. Where's that one? Wednesday, here we go, long, 1865. This time I took a counter trend move. Why? Taking at 11.31, just held 1% long, banked early, but it hit my T2, but counter trend move, so I was always cautious. So I did take a counter trend move. I did take a move against the bigger picture, because it was a 764 strategy. And it come down and found some support. Completely disenchant. We'd done what I wanted it to do. And when we got this sort of a pump up, I thought, okay, maybe it's going to make a climb, and we're going to this time get to 1894, which we did. We got up there. So let's get rid of all of this, because that's the play, and this is the journey, and this is how I've been trading gold. So I think if you start trading a currency pair or anything, and you get to get familiar with it, and you start to learn how it moves, that's going to help. So like this, I'm trading it every day, and that's helping me understand what it's going to do, what it may well do, because I've just seen what it has been doing, and you follow it, right? You follow it, and you become more confident and comfortable with it, because you can start understanding it. So pick one or two pairs that you want to familiarize yourself with. Stop testing those. Stop back testing those. If you want some help with them, so if you have your favourites, like, I like to trade gold, I like to trade pound yen, look at the pound dollar. Yeah. So if
Sorry, Alex.
yeah.
Mind, what are those? Is that EMA that you are using?
EMAs, yeah, exponential moving averages, yes.
1, 2, 3, 4. Is that 4 EMAs? Yeah.
Yeah, four EMAs, yeah, 4 exponential
What
moving
is
averages.
the price?
So
Are you using? Is that EMA 5?
no, they are 8 periods moving average, which is the thinnest one.
Yeah.
That's
And then the next one, the white one.
21. You can use 20 or 21.
Okay.
Then 50
50. Yeah.
and 200.
That's 200.
Yeah, so 20, 50 and 200 are the main ones, and then the 8 is the one that just helps me establish like a trending market, because it changes very quickly, and 8-day moving average, 8 periods moving average is yeah. As with any, like I said, as with any indicator, I pay attention to them on the larger time frames.
Yeah.
But when you're scalping on, say, a 15-minute chart, that's still pretty cool, and you can still use them, and it works quite well. So yeah, let's have a look. So yeah, I was just just monitoring the journey, and things have been going really, really well. So we're on point with this, that we've thought and felt and had a good feeling that this was going to give us more downside and challenge the current lows. And I figured at the end of the day, if it's going to break the lows, now's the time that it's going to do it. It's either now or never. Never. And why? Because fundamentally, we have a vaccine, then we have another vaccine, then we have another vaccine. They're all suddenly making vaccines. A bunch of vaccines appropriately, conveniently, I should say, a year later, a year down the line, a whole year, it's all very structured in how these things happen, and then people start talking about conspiracy theories and all the rest of it, which I'll leave that to you guys But you know, it is quite funny how things work. You know, like no vaccine, and then there's three,
Yeah.
and then all at the same time, and each one on a Monday. You know, so we've had these massive moves Monday. Yeah, it's been great. For Mondays have been a great day for trading.
I think it is
Yeah,
pure speculation, right? Because I mean, some companies just jump in and start making vaccines like crazy, and I don't know. I don't trust it. It seems very suspect, right?
well, yeah, maybe. Who knows, eh? So look, this is what happened anyway. We waited again, tested once, twice, three times, tested. The third time I'm expecting 1850 to be broken. So let's get in on the pullback if it gives us a pullback. And it did. It gave us a pullback. I'm so thankful that it gave us a pullback. So Friday I took the shorts and got in because it pulled back. It pulled back and then nothing. People started saying, okay, this is going to go to 1900 and it's going to make a move. It's like, okay, if it does that, then we won't worry about it. But if it doesn't and it stalls, which it did, we'll start getting our positions on ready. We may get more vaccine news, good news over the weekend. So we'll come in on Monday and this will have gapped down. It didn't. It didn't actually move until 2:45 London time, and the US markets had opened at 2:30 London time, 9:30 New York. So 15 minutes after open, we had this move, and it started. So it broke the 50, but we got in here because we positioned ourselves, getting ready for what we thought would happen. And that's about trading your plan, planning your trade, and just having a bigger picture idea as to what is going on in the world fundamentally. You know, what can we expect to see happen, and what if it does happen? Even if you didn't position yourself here and it starts moving down, you should be trying to take longs here. You should just be sitting on your hands waiting for gold to play out. And if it starts to do this, jump on it. Right, this looks like it's going to make another move, you know. Set a T1, 1850. 1860 was my T1 up here, just to be safe. And if it, you
Can I
know,
ask a question?
yeah,
Which do you think is the more important, fundamental analysis or technical analysis?
both. They have to be both together. They have to work both hand in hand.
Okay. Mhm.
You need to understand this is a fundamentally relevant move. You know, the banks. If you put yourself in the eyes of a bank, pretend you're a trader in a bank, and you've got $100 million invested in gold. It's the same principle as a retail trader. When are you going to take that money? Do you think that it's tested and made new highs and done all that? Do you think now with the vaccine news that you should be holding a safe haven product? Instrument, have your money in now? Should you take some profit now because you think, okay, I'm speculating that things are good, you know? So let's take profit off gold. Let's move our positions out from there because they have to offload it and sell it to another bank. So if we start doing that now early, we can be one of the first, take our profit, you know, maybe take 70% of our position off and leave maybe a small position on because they position trade. So they've got all this money and they always have to have their money invested somewhere. So they move their money around their portfolio. So what they can do is, okay, let's take the profit now. Then if this drops at 1800 and it finds support there and it starts to go back up, let's look to maybe buy it back up there. So maybe next week we might see some buying back up from 1800. Alternatively, it may continue to drop. And, you know, here, for example, was our first downside target, which if I get rid of all these other fibs, we were looking for the extension levels. So 1836 was our first major target that we looked for. And we got down to 1836 on Monday. That was the first place, and then it consolidated. And then the next day, early hours of the morning, going into the next day, we went down to 1800. So you could have shorted it there. You could have looked to short this there. You could have looked to short it quite a few times by drilling down to maybe a 1 hour time frame. And so that's where we're at right now with this price action. We're just testing the underside of our extended fibs. Make sure your fibs are correct as well. The 127.2 is relevant. Yeah?
You basically took multiple trades on multiple time frames, right?
No, I just took some trades and made
For,
some
for
money.
example,
I used the fibs. I used the support and resistance for
for example,
targets.
you scalp, you scalp it like on the 15-minute time frame and
Yeah.
30-minute time frame, and
Uh.
then you go
Oh yeah, 15
swing
minutes.
trading.
Yeah, so we make our money on that in that week. That's a good week. So then we're saying, okay, we've made our money. So any bit of trading we do now, let's just keep the focus on gold and just make a bit more from there. We just keep shorting every time it pops up. And so when it did, where is it? When it did this, so we use maybe a 15-minute and a 1 hour, and we want to gauge this price action. We want to look at this last swing high. Let's maybe show you where we're coming from here. There's the move, and then we look at the pullbacks. Look for some swing high. Look for some area where it's gone up. There's a peak right there. It's gone up there. So let's put our fibs on that range. Just focus on this range here because it's still bearish and it's struggling to go up. Right. So there's more opportunities to be had just by scalping this range. And when I say scalp this range is huge. This range isn't like a couple of pips. This is like a 180 pip range. It's big enough to make money out of just scalping it every day. And when I say scalping, I don't mean like 1 to 3 pips or 4 pips or 5 pips, which is what we associate scalping with. Scalping is also the time scale that you're in. So if you're in for like 10 minutes or less than half an hour, less than 30 minutes in a trade, it's like a quick scalp, isn't it? You're in and you're out. The scalps have been making 20 pips, 40 pips, 60 pips. So it's been very, very good. Yeah, it's been incredible. You only need to do one of those and you're done for the day. Especially if you're saying you want to risk 1% risk. So once with a scalp, the other thing is I don't have a T1 and a T2. I just it moves a bit. It goes down to an area where I think is previous structure somewhere. I think, okay, let's get out and take the profit now, and that's it, and done. And then let's wait for it to go back up again, and then we'll repeat that process, get in again and short it, and be patient, wait for the next setup, and let's repeat it and repeat.
Very basic trade, right?
Very what?
Very basic trade.
Yeah, very easy trading. Very stress-free trading. We're just trading the trend, and there's there's no reason to be overthinking this. This is I hate it when it does this.
Analysis paralysis.
It's what? Sorry, what was that?
Analysis paralysis.
Yeah, exactly. Okay, do I get to move it now? Oh, I do get to move it now. Great. So this is the trade. I've got one on at 1834.
Oh my god.
And it's just holding the stop losses at 1818, which is here. This hit you see here.
Crazy.
You see here. This is the high. The retracement's 50% so far. Of this smaller range. How have I done that? I've picked the the last little swing high, which is here. Is that on it? That's it. Good. And there's the low, and our target was 1800, and we got to 18.4, something like that. We came within about 3 or 4 pips from target, which is a bit annoying, really, because had I been around for this and seen it, I would have cashed out and been done. But what actually happened, because it didn't go down there, I said, okay, so the longer it takes to get to 1800, the more times I'm going to trade this move. So every time it pulls up here, I'm going to short it. Goes up, short it. Goes up, short it. A week later now, a week later and 100k in, we're still holding that one position. That one position is just floating in profit. And I've locked in 160 pips on it, roughly. But that position's not the important position anymore. It's no longer relevant. That's not the life-changing position. It's not going to do anything amazing. It's what is going to be important and amazing is well, we've done it. We've done what we had to do. We've traded this move. We've traded gold successfully all week, and we've made our money, which means that position's redundant. That position is just, it's a nice position to have. Yeah, it's not anything that we need to worry about though. So yeah, it's all good. So let's see what happens. I think today we might see that move down to 1800. I think today is the day. If it's going to do it, it'll do it, because it's been a week of consolidation.
Maybe, yeah.
Look at the consolidation we've got here. Are the US traders going to be around today on their Thanksgiving holidays? Are they going to come in, and are they going to, are they going to push this price back up, or are they still off? So that's I was kind of hoping that they're still off, and just hoping that what's going on here? I was hoping that they just leave it all alone and allow gold to just trickle on down, hit 1800. And that's it, and then be done. And let me just show you, this is where we're at with it. And then we can maybe take a small break. Let's get this over here. Move that out of the way. Alright. Technology's great when it works. The opposite applies as well. Come on, here we go. Right, let's get this over here. Let's go up, scroll up, scroll up, scroll up. So this is where we're at. And this was funny. This was something that I did the other day. Yeah, so I was short in gold, and I pressed.
You should have a MacBook. I'm joking.
Yeah, I know. I made a mistake here. I pressed the wrong instrument. I shorted New Zealand yen. Someone asked me about that. I pressed it by mistake. That wasn't meant to be. That was meant to be gold. So look, I took it there at 33 seconds, and then I took this one at 40 seconds. This I meant to get in short on gold,
Ooh.
and I took the wrong one. And
7 seconds.
yeah, it's quite funny. I took the wrong one, because this is what I see on my phone. So, they're next to each other. So I ended up pressing this one. I didn't realise I shorted New Zealand yen instead of gold. I pressed the wrong one. Fat fingers. So that's why someone asked me, what happened with New Zealand yen? I said, well, that was an accident. It wasn't meant to be there. It was just, it wasn't a trade that it was supposed to have taken. So, what can you do about that? There you go. So yeah, that's where we're at the moment. That's what's going on, and we're just holding one position, and
100K in 1 week. Oh my god.
Yeah, this is what it's like. This is what I imagine it to be like to be a football player. What do you reckon on 100K a week salary?
Oh my god. It's too much.
To be like Diego Maradona.
Yeah, he died. I saw it.
Did he? He didn't die? No, he's still alive.
Maradona?
He's faking it.
He's fake news?
Mm. Yeah, fake news. Yeah, I've already seen people come out on the internet. Fake news, conspiracy theories. He's not dead. That's not really his body that was on display.
Are you serious?
No, I'm kidding.
Are
People.
you serious about this information?
No, people go on the internet and look at fake news, and people say, no, he's not dead. He's just pretended and stuff like that. It's quite funny.
So you're joking, okay.
If you type in anything on Google.
The man is dead.
Yeah, I know.
I heard it on.
Yes, I know. I know he's dead. I know he's dead. I'm saying though that if you go on the internet and you type in, "Is Maradona still alive?" you will start seeing fake news about him being alive, and he's he's
Okay.
Like Michael Jackson, right?
yeah, like Michael Jackson,
Tupac Shakur.
Hitler. Oh God! All these
Oh, Michael Jackson. Oh my neighborhood yesterday.
Did you? Fantastic.
Yeah.
What did he say to you? Ah, dear. Yeah, anyway, there you go. Does anyone want to look at anything? Shall we look at anything else? Any more questions? It's been a good session, I think. I think we've covered a lot of things in detail. We've talked about a lot of things. I do wish you all success. I hope you guys are going to make some good money. And if you need any help or assistance, please don't hide behind your charts. Do get in touch. Do send me, screenshots of stuff that you're doing. Send me a chart. Send me anything. Say, look, this is what I'm doing. What do you think? I'm a bit nervous. I'm not
I
sure.
will send you some trades that I have to. You know what, Alex? You are my mentor now.
God help me. Sorry, what was that? I didn't say that out loud, did I? Yeah.
Alex, hello.
Yeah, hey, how you doing? All right.
Hi.
God bless you.
I'm good, thank you.
And this is
Do you have some questions?
Yeah, I've joined the session late, so you might have already covered it. I just wanted to ask, I think it's a basic question, but when you draw your fibs,
Yeah.
can you just run through how you would, how you would kind of measure them up and what
Yeah.
way,
Yeah.
from where to where kind of thing?
Yeah. Yeah. So start. They people talk about top down analysis. To start from the highest time frames, so you have them plotted on there. So look at the last swing high and swing low, and then drill down and start looking at what's happening now, maybe on a weekly and on a daily. So we look at the weekly because it's Friday, and we start looking at the last, where the move started on this move was here, and you can probably see that in a little bit more detail if you say a 4-hour chart. That last pump up, and this is where we got in, and so put your fibs there, to there as the range, or you do it on different time frames as well, so covering different aspects, so like different parts of the range. So on the weekly, for example, we're covering a much bigger picture, a much bigger area, surface area. We're looking at like thousands and thousands of pips, aren't we? Looking at the start of this move, which started last December, I think it was. Last September 2018, in fact. So we're going back quite considerably, but they're on a higher time frame. So when you plot these fibs, you won't need to move these now. I did have to make an adjustment.
The fib,
Yeah.
you start the zero from, I know it's really basic.
Well, no, it's
Is it from the top or from the bottom?
Well,
Because,
so it's called a Fibonacci retracement. So you're depending on which way you're trading. So if you're interested in taking this short back down, then we want to have the zero at the top, because that's where you're in theory. Yeah, it's like the start of a race. This is where you're starting from, and so you want to see where it wants to go. Where's it going to go? And so we're doing a retracement back down. So it's like a yo-yo effect. It's like those skateboarders. They drop in, don't they? And they go
From
in.
left to right, Alex.
Yeah, left to right. Yeah. So, or like here, if you want to monitor this bit here, so we'll go down to, say, I don't know, a 1-hour chart. No, actually, let's do it on a 4-hour. See if that's any good. Let's look at this range, and let's say that the bottom is in on this range. Maybe a 4 is too low. Let's look at this. So let's look at where it's come from so far. Let's assume that this has stopped now, and it's not going to go any lower than 18. So look at this. If you are thinking of going long, this is when you sort of say, okay, I'm thinking of going long. Where will this retrace up to? So your zero is going to be here. Therefore, it does it for you, the tool, automatically. So all you have to do is go, right, so there's the high. I'm thinking that the markets are going to go up. Maybe retest this high. May take a few months or a few weeks. But there's the high. So we click there. We pull the fib tool down here. And it automatically does that. So yeah, like you said, from left to right. And so from left to right, it's given us a 0 here. And the 100%'s here. And it gives us a 76.4 up here. So you start looking at retracement up. So yeah, so if you're looking for longs, then your 100% is going to be up here, because that's your finish line, so to speak. Imagine it that way. If you're looking for shorts, then your finish line, your 100% should be down here somewhere. And I'm still looking for further downside, so if that's a 0, and I'm looking for it to continue. If you're doing stuff on an intraday level, and you know, looking at the range, for example, which is about 180 pips so far this week. All I've had to do here is try and identify the last swing high. I think we probably see it on a, let's have a look at it on a 30-minute. The last little swing high, so we had this pullback, which ties in with several other confluences as well, because you'll notice that we have this, you know, this N shape, which forms previous structure. So that was support, broke support after testing it twice, broke and retested. The break and the retest, you know, the classic price action, break and retest, which is really nice to see, isn't it? Stuff like that is good. When you're seeing stuff all just work and everything's just working and the stars are aligned, like I always say, it just gives you further confidence in terms of
When
what
you're
you.
looking at it back in hindsight, it's like it obviously looks quite obvious, doesn't it?
Yeah, no, it's true.
See,
That's very true. So you know,
And I
let's.
think maybe because you're more experienced, you can probably see them a lot.
That's it. That is it, really.
Quality.
Yeah, experience pays, because you don't know that it's going to do any of that. So you've got this move on the go, and it's made this move, and you think, okay, it's made a massive move. What sort of a retracement are we going to get? And then it does that retrace, and so you think it's a bouncing ball. It's such a strong move. So it goes
Because of
down,
that
pulls.
strong move, I would have thought it would have probably gone up a little bit more, but
Yeah, I would think the same. I'd always reserved the right to think that way and think, okay, yeah, we're going to get a retracement, but what sort of a retracement? How high? That's anyone's guess. You don't know. But this is where the fibs become so handy and so useful, and they're worth their weight in gold, because what you could have done then is gone, right, okay, there's the top, there's that move, which you can clearly see. It's higher than any other point. It's taken out all of this price action, hasn't it? It's made a real good beacon, and then this is the low. This is where we've had a significant bounce as well. So there we go. There's your fibs, and so what sort of a retracement are we going to get? And maybe expect it to go up to, I can't really see them now because I've overlapped so much. It's just messy, isn't it? But yeah, expect it to do that. Somebody measured this and somebody said this is a 23.6. So it was a very weak move up to 1840. So we got in. I helped one of the guys with his FTMO to get in on that and make his money, and he shorted, and I shorted. I took several shorts, and then when it confirmed, I kept one on. So that's why I have one on at 34 still, because I saw this maybe still bearish. There's just still got further downside to go, and I think actually from here it's only a 300 pip move. We're going to get down. It's early in the weeks, you know. It's only Tuesday, Monday going into Tuesday. We're going to get to 1800s. Yeah, let's take this down. We've got further to go, and then we did. We saw this come up to here, 32. I had my stop to break even. It didn't take me out. It came up, did the retest, previous structure, and then off it went, and it was quite nice to see that.
No, I was in on the move from 1870.
I know you.
Around the
I know.
price that you said.
But
As I told
yeah.
you.
You weren't alone. No, I know. I said this to everyone. I said there were people that were sitting there, but I said it's a bit like being very impatient. So, traders, successful traders, take money from the patient traders take money from impatient traders, and that's the idea. So it's like taking a 5-year-old to have their hair cut, and they can't sit still because it's itchy, and it's like that. So you kind of just have to sit on your hands and learn that discipline, and just wait, and not try and go long on this, and just wait, because you think, okay, if it makes a move like a pump up, then we can start exploring possible longs, or if it makes a move down, then we start exploring possible shorts, and that's a slightly safer play. Or get in a bit more aggressive and be ready for the move, which is what we did. We got ready on Friday for the move short. So nobody should be going long. Should be just waiting for it to go. If it doesn't want to do it, fine. Or wait. When it made that move, you should have been all over that and get on it. But that comes with experience. But
when you're actually shorting, so say for example you were shorting from 1873, 74.
Yeah.
Would you say you would not? I've noticed when you are doing that, all your trades are sells, so you're just going for sells. Is that right? So you wouldn't actually try to.
I wouldn't take
any buys.
Yeah, no count to trends. Yeah, because
Yeah.
the trend is your friend. It's just easier. You're taking
Even
the part.
for scalps, you wouldn't.
No, definitely not. because it's
Yeah.
the path of least resistance, and especially if you're scalping, scalp the shorts and you're going with the trend. So what's the worst case? You've got more of a chance that way, even if it goes up against you a little bit, that you're still in the downtrend, that it may then come back down to your entry, come back down to your target. It's more likely. The probability of that happening is higher.
Yeah.
Whereas if you're trying to take trades against the trend, because some people try and be smart and try and call tops and bottoms, and they try and get in here, and then it drops on them, and it can drop quite hard because
Yeah.
it's
It just happened so suddenly,
yeah
and like a few days. I thought maybe it'll happen next week, but
Yeah.
clearly, yeah, you just don't know. So I guess you have to. That's where the discipline comes in.
Yeah, and don't overtrade it, and actually believe in your conviction. So if people are scalping this short and long, then maybe they haven't really got a watertight. They don't have a watertight trade plan, and in terms of saying, okay, I think this is bearish, so I'm only going to focus on shorting it. If you're taking longs, then you don't believe that. You don't believe in your analysis, or you haven't got analysis, or you don't really know. But scalping can really skew your view of things because you're so engrossed in what's happening minute by minute, because scalpers often use the minute time frame and the 5-minute time frame, at best the 15-minute chart, to see what's happening now. So you're not really looking at the bigger picture. And what will happen when the banks come in and move it, because they ain't trading on a 1-minute time frame. They're position trading, and they're going to move like 50 million, and you're going to be scalping with your little scalps here and there, and they're moving 50 million. All of a sudden the markets just make this humongous move because they've just moved a massive amount of volume and made it move like sitting in. It's like sitting in I don't know, the sea. You know when you see those on social media, and you see those funny videos of someone having a picture taken by the rocks, and then this massive wave comes over them just as they're taking a photo, and they get soaked. It's like that. It's like you don't realise what's coming behind you.
Yeah.
So you have to be ready for that, and you have to be aware. And how do you know that? Well, fundamentals. So you don't need a degree. You don't need to be an analyst in a bank or have an analyst as a friend. You just have to understand that we had vaccine news. It's global. It's historic. It's massive news. Massive news. So the banks don't need to hold all their
From
risk.
that point on, you probably knew that they're going to start.
Taking their profit. Yeah. Yeah, because gold's a safe haven, and they take that because of uncertainties. But then if it's good news, then they don't need to hold it. And also it correlates with the stock markets. And if we're seeing stock markets rally, you don't need to be holding. Yeah, you just need to be paying attention to it. Yeah.
Yeah.
Do you know what? I'm going to cash out on these positions here now in a second. I'm going to wait. If we could just break down to 8:03. Come on. This is where we can use like a 1 minute or 5 minute and just look at what's going on. Alright, so I think we could, safe to say that we can, let's see, come on, a bit more, and let's close out. Come on, you can do this. Oh, here we go. Oh, we're doing it. We are doing it. I'm going to cash out here, 0302. There we go. I am all out, and it's, if it goes to 1800, that's it, it's done, but we're all,
No, that's amazing, Alex.
we're all done.
You
Yeah.
did- yeah. Do you think it's going to?
There it is. There it is. It's done. I knew it was going to do
There you
it.
go. It's hit it now.
Yeah, that's good. It's done. Sweet. So all done. Yeah, so we can finish up now, can't we? Fantastic. There we go. It would break. Done. There we are. Done. Oh, that's it. There we go. I'm all out. Everything. Sweet. Done. Good. All right. So Friday, and that's what we looked for. Anyone make any money shorting gold this week? Hope so. I do hope so. It's just, it was a good play. That's it. Yeah, I'll take a photo of that as well. It's good for reference. See, because this is the worst thing as well. Because we're sat here, it's fine. I've taken the profit. I cashed out at like 02, but because we've sat here watching it, I didn't let it hit the target for the 20 pips or so. Not that it's a big deal, but that's even there, I didn't hold it and wait. I didn't sort of concentrate and have the discipline to kind of sit and just say, this is going to hit 1800. I just thought, yeah, let's we're done with it, you know. Let's go. Let's. So yeah, even there with everything going on, I still didn't. So it affects everybody. Trading is just that's trading for you. You know, it doesn't matter how experienced you are or how patient you are. Sometimes you may still do that because of a whole week of just holding and waiting and holding and waiting. And part of me is then saying, well, I've been patient enough to wait that long, and so it could go either way. I could say, okay, shall we just wait again, or we've given it enough chances. You know, that's it. It's had its chances. There you go. You knew that was going to do that. There you go. There's all those orders being filled. So people trying to go long. All those people taking longs down at 1800. All those orders for longs. Let's go long and gold. Not. You know, it's like that's what people will do. That's what traders are doing. That's what they've been doing. So that's great because I'm counting on it. A whole week of consolidation. A whole week there for waiting for traders to come in and call the bottom on this and put longs on at 1800 or around that area, and then for those orders to be filled, and get stopped out. And it was just, why would you do that? What a pointless way to trade. And it's like, well, I'm trying to catch the down, you know, I'm trying to catch the bottom. So then it's like, okay, so you say you successfully catch the bottom, then what would you do? Where are you going to hold it to? Well, I'll probably just take 50 pips. I'm like, so you're going to do all that just for 50 pips, you know? Well, they may well take it all the way up and think, I'm going to hold this up now, long-term trade to 2,000. Okay, well that's different. You know, so what's your plan? As long as you have like a plan, and you know, talk it over with yourself, because if you think that plan is a bit rubbish and a bit weak and a bit like, yeah, sounds a bit weak, to be fair, then run it by us or share it with the group, with other traders, and say, what do you reckon? People will give you an honest opinion, because we're so good as humans to judge other people and to give our critique, aren't we? We're not very good at doing it for ourselves, and the problem with this business is that we have to be able to critique ourselves, and we can't even do that in real life. So how are we supposed to have any chance of doing that when it comes to trading? Are we making the right decisions? You know, it's very, very difficult. So thankfully now we have the internet, we have forums, we can connect with people like never before. Need to stop. Traders need to stop doing this. Need to stop hiding behind their laptops, hiding, you know. You need to start sharing a little bit more, and there's no right or wrong way, it's all subjective. But if you have people that you can share ideas off and say, okay, these people are making money, I would like to get some of that money as well, have a share of it, share of the spoils. I think, you know, you need to start changing things. If what you're doing right now isn't working, you need to start changing it. You need to start considering alternative ways of working, and so that's the process, and it may take you some days, weeks, months, but hopefully with a bit of support we just help fast track it. So hopefully help is on hand, and
I think
you know.
Yeah, I think everything that you've been doing has been invaluable. So I'm really glad that I discovered you, Chris, and Martin. You guys are great.
And Martin's here. Speaking of devil, there he is.
Oh, is he?
4.
You got your 1800 on gold then?
Of course I did. I told you, Friday. I'm the markets. Come on. Just, I don't know. What? Yeah. I'm just thinking, why didn't anyone make any money off that move? Why hasn't anyone been shorting gold? Why don't? But like I keep saying to you, people will learn. They'll learn. They'll start listening. They'll learn. It's okay. Sooner or later.
I did have a short, but it took profit at 1800.
Yeah, that's all right. That's nice. That's fine. Go on. What was you going to say?
It hits a top or a bottom.
Yeah.
Then I've noticed that it tends to hit it about 2 or 3 times, like about 3 times. So it will test it around 3 times.
Yeah, that's good. You can add that as part of your
Have you noticed that?
Yeah, your confluences.
Yeah. So then the second time it will take out the people that got in the first time thinking they're at the bottom.
Yeah.
And then the third time it'll probably do the same again and possibly go a bit lower.
Yeah.
Yeah, very often you see 3 moves down or 3 moves up.
Yeah.
sometimes there'll be like in a third wave of there'll be 3 little waves within that. If you just keep your eyes peeled, you can see these things.
Yes.
But then you still wait for it to go your direction and give you an engulfing or something like that. Something that's gives you some sort of confluence.
Yes.
Just don't blindly take it.
Yeah. So there you go. All good.
There's a trader that I follow on Twitter, and he's
If he's not
very
me,
accurate as well.
yeah, if he's not me, then you shouldn't be following him.
He's not the market. So.
he it's in confirmation with what your analysis anyway.
Oh, okay. All right, I'll let you off.
So yeah, but
What's
yeah,
his name?
but, yeah, so he was I think it's Alessandro or something like that.
Nah, it's the same guy. Alexandra.
Oh yeah, no, I'm catering for the
that's
Spanish
very-
or for the Hispanic audience as well, because that's quite a big.
For Latino.
Yeah, because globally it's quite. Yeah.
Alessandro.
If you-
disguised it better than that.
Fernando, that's it, Fernando.
Oh, Fernando. Okay, excellent.
Yeah.
Good old Fernando.
Yeah,
Yeah, he's
it's,
copying.
at Fernando.
Well, Alex is a
FX
bit of a
Waves.
ABBA fan, I think. So
I just music's great, isn't it? Isn't it great to have your own desk? You know, if you're in an office somewhere, maybe you can't play your music, but you're at home at your on your office, you just put your music on. When we're in the office, we always have the radio on. You know, people like to have
I just
like to have.
connecting to the sound bar I got and just blasting it.
Oh yeah.
Oh, that's great.
You don't tell them that, Morgan. Fernando is Alex's middle name. Yes. Yeah. So yeah, there you go. That was good. I was just saying, I just cashed out earlier. I said after all that, right, we've been sitting here watching and watching and watching, and I was just watching it drop now, and I said, like we're looking, thinking, is this gonna do it now? Is this the time? And what time did it do it? 1 o'clock or so. And I still ended up closing the positions down at about 02. I still didn't hold it to 1800 in the end. Why? Because
Oh, I did.
yeah, see, I closed it early, and I was like, even it gets to the best, it affects us all. It's quite funny.
Hello, guys.
Yeah,
Is anyone using IC Market Broker?
yeah,
Is anyone using IC
yes, yeah, I do.
Market? I don't know why these guys keep sending me mails of events that have passed in my trading. I'll just get an email that my position is filled, whereas it's something that happened 48 hours ago.
Go on their live chat and tell
Everyone
them.
is having that same issue.
No, I turned all my preferences off. I turn all your preferences off. Go into your client area and set all your preferences to turn off all your emails so you don't receive anything. Have it all turned off. You can do that, can't you? Stop receiving emails and yeah, yeah, you have to, yeah. Yeah.
Annoying. I just asked myself, when did I send the trade? I don't have any pending order.
Yeah. Oh, scary. So what's this trade you've shared? Oh, 1750. Okay.
So that's his analysis.
Oh, that's his. Okay.
So yeah, I think he's thinking that it's going to go to wait for an entry to short it again between 1840 and 1860. 1860 seems a bit high, obviously looking at it now, but I don't know. Anything can happen in the market.
Yeah, no, never know. Depends what mood I'm in. Yeah. Oh, yeah, I don't know.
You
Yeah,
are the market, aren't you, Alex?
that's it. You'll learn. It's all good. Yeah, I mean,
I took a small buy at 1793.
yeah, because Martin does that. He likes to just have a bit of fun with these things. And, yeah,
I love it.
yeah. So yeah,
When
that's
you're ahead of the game, it's easy.
yeah, when you're ahead of the game, it's easy. That's right. Your mindset and just
I
feel
just
you
took
feel
a
okay.
buy at 1793, and I don't care.
No, exactly, which is great.
You're going to hold it over the weekend, Martin?
No, am I how?
Oh,
I might hold it another 30 seconds and I'm out.
Yeah,
Well, when you've got decent lot size, it's there's no point in holding it.
yes. Yeah.
I'm already 30 pips up, so
yeah, I think that's it. To be fair, look, we've gone up and that's it.
I've taken half off already.
Yeah, take some off and see how this moves back down to 93 or so. It might even be a better move down. But to be fair, it needed to take out all those stops, any orders that were below. That there was liquidity there. It would make sense.
Oh, for sure.
The amount of
Done a lot
people.
of damage that has.
I'm always a little bit like surprised maybe, but then it's not until we speak to people in different. Okay, so you're the one that we're going to be taking the money off. Okay, it's good to know. Put a name to the face and the name to the dollars that you're about to hand over. You know, it's quite funny like that. Just have to use common sense. I keep saying it.
I'd love to see it go up. I'd love to see it go up to like 18, 19, take out all those stops up there.
Yeah. Well,
It's a short day today for guys, isn't it?
I don't know, but I'm done now, so I think we're going to call it a day and a week and a month, and probably just finish up here as well. There's no reason to do anything else. I can even shut down the computer and give it a rest. It's worked hard. Oh dear.
Steam coming out.
Yeah, exactly. So let's update this. Where is my trade? Oh, there it is. So target. So T1 hit, which was 340 pips. So I took 320 pips. 200 banked. 300 and how many did I bank actually? 18 3294, so 29 just below 3 actually. That's pretty rubbish, that exit. Ah dear. See, there you go. You can nitpick and scrutinise it. It was 30. I left 30 pips on the table. After all of that, I think also I haven't been around when it's gone down to test 01, 02, 03, which it has done several times. I haven't been here. I'm pretty certain had I been here, I probably would have closed them. And I did say it about an hour ago. I said I think if I was here before that, I would have closed it by now. Like the first move down, it went to 1800.4 or something. It was up 3 or 4 pips from the target. So I said, had it gone down and I was around for it then, I would have closed it. So the fact that I had that in my head, that made me react like this and close early. So I closed at just shy of 03, which gives me 310 roughly, which is alright. That's still about 2.4% in total today. Oh, didn't want to do that.
So we get another flick down there.
Yeah. Are you still? Yeah. Well, hey.
No, it took me out at break even for the other half.
Ah, okay.
I made nice money there.
Yeah, I'm sure. Been good for that. Why is it doing that?
I made your 30 pips.
Yeah, that's alright. That's
30
alright.
pips you missed, I took it.
That's alright. Why is it not doing? This is a bit weird as well. Normally you just click on edit undo and it would undo. Let's go to quit and let's go to not save. Oh, it did it as well. Shoot. Yes, saved that as well. I was showing them about risk management when it comes to trading these FTMO challenges. So they're really handy.
It just disappeared for a minute there.
Alex, this is getting recorded, isn't it? So I can watch it back.
Yeah, I'm going to stop the recording now actually. I'm going to stop the recording and save it. I think everything's done. I think there's nothing else that we really need to focus on. I think it's been a good week. Really.
When did you start?
About 11, so about 2.5 hours ago now. So it's plenty to be talking about and going through, and we've covered a lot of stuff where we've covered it over the week as well. So it's good to repeat stuff, and maybe some of it will stick. I know for a fact it has been, because people have been sending messages through Telegram messages and saying, "Oh yeah, thanks for that," and I can relate to that, and that's helped me, and that's good. I mean, people have got some stuff out of it. So
I thought, was it Yubi's video? It was very about passing the challenge.
yeah, because he passed and then he messed up a little bit, and so I helped him, because he went right down. He had I said, "Show me your account," and he showed me. He had 4 trades on, and said, "You're over trading. You don't realise, but you're over trading," and yeah, so I helped him make some money out of this move on gold. I think he took his money off when it went down to about 04, somewhere like that, a couple of days ago. So he went right down to about 90,400. He had 400 left. There's like one more roll of the dice. But now he's got it up to about 93,000. So he made a good comeback with this trade. So I said, just do one trade at a time. One trade every day. One trade. And if you can get, you've got plenty of time. He's on the second part of that challenge. He's got 60 days, so he's got until mid-January, and just let's get you back up into profit, and then take it from there. Let's get you into profit first. So one step at a time.
So much time.
Yes, so much time.
Afford to take the smaller trades. Just let them multiply.
Exactly. So no trades there. No trades there. Just closed my last gold.
I think the biggest thing with FTMO is when you start over trading.
Yeah.
Look, he happened to me a couple of times. I got
Yeah.
to the target before
Yeah.
the days required, and then all of a sudden you somehow fuck it up, and you're like, oh no.
I think it's more of a psychological test, that FTMO, than it is trading almost.
Yeah, that's right. It is.
Yeah. Almost battling yourself and making sure that you're doing all the right things.
Yeah, it's very cleverly laid out.
Yeah, that's true. So yeah, good. Nice. Been a nice week. Hopefully people have made some money. So I just need to update this. So missed total 4 pips off at this, so we can adjust this. So we'll update my notes, and we don't need to have that on there. So taking it 11:43, and it was closed or banked early. Closing us to get around 1800, so we don't need. Yeah, I said Friday it would do it by the end of the week after consolidation. So you just had to be really patient and use this time to just keep scalping gold shorts all week. Keep scalping until such time we get to 1800. Once we get to 1800, that's it. You're done for the week, on gold at least. So trade every time it goes up. Trade it until it goes down and actually retests 1800 again. By which time you should have made extra pips, because you will have taken a trade, repeat, take it again the next day or an hour later, repeat. Yeah. Oh, there you go. Yeah. So 1725 maybe. Very good. I mean, this is great. 1790. This is perfect. 1790. Phenomenal. I've got 1725 pegged. Or 26. Should make it 1726. Yeah.
Sorry.
Yeah.
Sorry, Alex.
Yeah.
I used to correlate once gold starts moving like this. There's this tendency that US 30 will definitely. That is the Jones. Will definitely tank as well.
The Dow Jones has been.
Just anticipate.
Well, see, they're correlated, aren't they? Usually, that the Dow Jones should go up. But yeah, I mean, things have been going. They haven't really been going opposite sometimes. They did go opposite when we had the vaccine news. I think maybe it's hard to say with the stock markets in America, because they're off. They're not trading today, really. Volume's going to be very low, so we'll see what happens there. But, wow, look at this. I didn't even keep a position on, did I? I don't need to keep a position on. No problem. Okay. Wow. Jeez, look at that. That's a move. Beautiful. So it's just done 150 pips in 5, 10,
Bro, you have your
30
hold on,
minutes.
blocking the chat.
Yeah, banked as it dropped.
You have
I know I have. Yeah, I'm filling in my
your chat, is it
journal.
on purpose?
Yeah, I'm filling it in. I'm just updating it. I've done my bit and banked to dropped to 1800. That's it. Oh, 8 at 1803, give or take. We still did 2.4%. It's important to keep things updated. It's really important. Yeah, you can look at it if you want. There you go. I thought you guys as traders would have. Yeah, you have your own charts, don't you? You do have your own charts. Do my charts look better than yours? They're certainly very colourful, but I don't know about them being better. 1, 2. So let's do how many trades taken here. So days 1, 2, 3, 4, 5, 6. 6 days, 6 trades. There was more than that taken really, but so roughly six trades. I mean, we've done about 10%, 2, 4, 6, 8, 10, 10.4, 10.9%. That's all right. A 10% week. Anyone want to pass the challenge? You could have traded gold with me this week. You would have passed it in a week. 10 plus 10.9. Shorts, all shorts. So 6 shorts, no longs. 6 winners, no losses, no break even, no runners, hit rate 100%. We're not going to trade Monday. There's nothing we need to worry about there. So we need to update this. I will do that later anyway. It's not important. We need to just kind of, yeah, okay, good. Thanks for that. Let me do that. Any questions? I'm gonna stop the recording. I'm gonna sign off myself. Stop sharing my chart. So if you guys need anything, let me know. Otherwise, yeah, I'm pretty much done.
Thanks, my
Oh,
brother.
sorry. Let's get rid of that.
That's
Get rid of.
all.
Yeah, no worries at all. Cool.